Hey, what's going on, everyone? Are you concerned about depreciation and not really sure how it even works? This video is definitely for you if you're a small business owner, curious about depreciation, how it's affecting your business from a tax perspective, as well as a actual cost perspective. I'm going to break it all down in this video today. So for those that don't know me, my name is Zachary Jensen. I'm the managing partner here at TaxWise Financial Services, where we're empowering small business owners to grow with confidence and build more wealth. Today, as I mentioned, we're going to go over depreciation from a business owner's perspective, so slightly different video, and the actual costs of it. So depreciation is just, for some, an accounting formality, but I assure you it is much more than that. So depreciation has real tax implications and operational implications. Although often excluded from metrics like EBITDA, depreciation is a critical concept for small business owners trying to understand how it works within their business, particularly when planning capital investments, managing their cash flow, and assisting long-term business sustainability. So first of all, what is depreciation and why is it even excluded from EBITDA? Depreciation allocates the cost of long-term assets over their useful lives, reflecting wear and tear, and these assets how they devalue over time. So EBITDA adds depreciation back to earnings to isolate core operational performance, but ignores depreciation. And honestly, that can give misleading implications about the actual financial health of the company. So depreciation doesn't reduce cash flow today necessarily, but the assets it represents will eventually need to be replaced. So let's give an example. Let's say you're buying a FedEx route, right? FedEx shipping route, and there are 5 trucks. Well, let's say the company makes $500,000 a year right now, but those trucks are in bad shape. Well, you're eventually going to need to replace those trucks, and let's say all 5 trucks cost $100,000 a piece. That's $500,000. Well, if you had to replace them all in 1 year, you're looking at no cash flow for the whole year. So it's a really big thing that in these businesses need to be looked at very seriously. The tax benefits, of course, for small businesses. Depreciation provides a tax shield by lowering taxable income, and tools like Section 179 and bonus depreciation can allow businesses to write off significant portions of these asset purchases in the first year of ownership. And this deferral of tax liability enhances short-term cash flow, which is essential for growing businesses. However, using all deductions upfront limits depreciation in the later years. So there's this concept as well of depreciation recapture, which is important. So if you accelerate the depreciation of an asset, this could be a truck, like we just said, or it could be real estate. Let's say you go sell it a year or two later. Well, your basis has been depreciated already significantly. So when you go to sell, you're actually going to have a higher basis, and it's going to cost you more money than you probably think. You could sell something for a loss and even have a gain, for example, on paper. So very important you talk with your accountant about selling large assets and the implications against your tax liability. So depreciation is a real expense. Warren Buffett famously dismissed EBITDA by saying it ignores the reality of assets wear and tear. So we definitely want to listen to Uncle Warren on this. Depreciation represents the very real cost of consuming capital assets. A business ignoring depreciation will face future cash outlays, and if it's not prepared, that could be the end of the business. As Buffett and Munger argue, adding back depreciation without budgeting for replacements is financial delusion. So we always try to advise our clients wisely here. We always help our clients optimize for depreciation and prepare for capital expenditures in their business. This means encouraging accelerated depreciation when appropriate, but also setting aside funds for asset replacement. Helping clients understand EBITDA is super important to us. So if you need help with understanding depreciation, EBITDA, how it affects your business, should I buy this asset, should I sell this asset, that's what we do all day here at TaxWise. So if you have any questions about your situation, reach out to us. Our contact information is in the description below of this video, and I hope you found this video valuable. Thanks so much for watching, and have a great day.